Morning, afternoon, evening. Okay, I don't say this lightly. I have a lot of important information in this video, so stick around. Do me a favor, hit that like button, subscribe button, comment button, all of the above, but I've got a banger for you today. And a lot of it is actually not Bitcoin related. I'd say, there's really only 3 posts Bitcoin related, a couple of ETH, and then the economic stuff that we're going to look at in this video is of some significance. All right, so let's go ahead and dive on into this. Now, starting out, here's, listen, I'm going to read this from CryptoQuant.com. Do I agree with this? We'll see. But there's something from the chart that I just really want to point out. Altcoins, it's not time to lose hope yet as the cycle approaches its final stages. Bitcoin dominance is likely to decrease and altcoins may see steeper rises than in previous patterns by @DanCoin Investor. So this is a chart from Crypto Dan. So here's what we have here. This is what I wanted to draw your attention to with this chart. You can see late 2017 into early 2018, UTXO age bands. Essentially what we're seeing is long-term holders. What are they doing? Starting with the 6 to 12 month cohort and then going into other cohorts here, you can see a steep decline in these age bands as Bitcoin's price has risen, that there's some significant profit taking from these different cohorts ranging from 6 to 12 months all the way up to 10 years plus. And how clean was it? Look at how clean it was in 2017, 2018. Look at how clean it was in 2021. And then look at now. And what do we see here? Well, it's been a much different market this time around, where instead of it going straight down, what we're seeing is significant spikes when we're all expecting straight down. I mean, if you remember that big run up in early 2024, it was alt season is imminent. And then the big run up in late 2024. All right, here we go, alt season. And we haven't had it yet, but we've had this 6 to 12 month cohort. Who is that? That's, probably a lot of spot ETF buying. That's kind of thrown a wrench into this market, just showing like, man, we have had a significantly different market this time around. So what do we make of that? Well, is alt season coming now? All right, I would agree with this. It's not time to lose hope. But this is just a different market. It's a different market, and let's wait for other things to align. There's some things in the rest of this video that I have hope for something significant with an altcoin movement. On a shorter timeline, we have from Dark Frost here, short-term holders starting to sell at a loss. And what does that mean? Well, that's actually a good sign for short-term price action with Bitcoin. So what do we have here? The SOPR, spent output profit ratio, has just turned negative for short-term holders, even as Bitcoin stabilizes above $100,000, which is a positive sign. For now, it's still marginal with the SOPR hovering around 0.99, so just barely below the threshold of being in profit. But there's deeper meaning here, something I realized after a conversation with Woonomic, Willy Woo. A negative SOPR doesn't just mean that short-term holders are selling at a loss right now. It also means that the available profits on the market have been fully absorbed. In other words, there's no more short-term profit left to be made. That's a strong indication that the selling pressure from short-term holders has been exhausted at this price level. Given that short-term holders are typically the most reactive to market moves, this is very encouraging for the continuation of the bullish trend because they might be more likely to hold or buy back in rather than sell at a loss. And short-term holders are, what do we say about short-term holders? They're very emotional. They're very quick to dump on the sign of any bad news or negative price action. And the fact that we've had a nice significant run up doesn't mean that all of a sudden now that they're in loss that it's going to explode in price. But it's a sign of potentially things to come. I mean, a place that sticks out Significantly, for me at least, is this period at the end of 2023 where my mouse is, and you can see a very brief period of time where we went negative and then a big spike up after the spot Bitcoin ETFs launched. Is that something, because we see what preceded that brief negative time was something similar in terms of spent output profit ratio in terms of where we are now. Is it something similar? Are we going to follow those global M2 money supply charts, or do we have a more prolonged period of time? We'll have to wait and see, but it's a good sign. It is a good sign that short-term holders on average are no longer in profit, because that's what's been driving a lot of selling pressure lately is short-term holder price action. So from Zhao Wetson here, the bid-ask price difference in the spot market is rising again for Bitcoin. If this indicator flips back positive, there is no doubt the price will go up. This is a simple game. The market maker who wins is the one with the highest bid, whether it's on the buy side or the sell side. This is a battle of strength. About the indicator, the bid-ask mean spot price spot measures the difference between the average buy order price and the average sell order price in the spot market. Positive values equals buying pressure, buyers are in control. Negative values equals selling pressure, sellers are dominating. And so what have we seen of recent is a period during that run up from 74K when buyers were in control. And at this particular point, sellers have been in control, and they're just barely in control right now. But we get back above that $0 mark there, and so buyers will be back in control. So when we see periods of buyers being in control, that's good for price action. And if you look at looking at when sellers were heavily in control from this run up to from 74K to 112, there were some periods of significant moments when sellers were in control. But look what happened with Bitcoin's price; it just chopped during those times. Now we have seen a bit of a dump. I mean, the selling pressure was too high, not just for short-term holders, but for long-term holders as well. So another good sign for short-term price action. I've shared with you, I am short-term, short-term more bullish than bearish, much more bullish than bearish for sure. Moving on, we have Ethereum from Psychedelic. Very bullish account. I want to be clear about this, but I agree with this chart. Now, this is the Ethereum Bitcoin chart. I have also shown this on my channel, especially during live streams. The Ethereum Bitcoin chart just looks very bullish. You see a breakout like this, and I had a trend line, and Ethereum broke through that trend line violently, and now you see this Ethereum Bitcoin price bull flagging. That's quite a significant bull flag, and the expectation from here is that Ethereum is going to break to the upside of this bull flag. It is very, very likely, in my opinion, that is what's going to happen next. I say give it another 2 or 3 weeks. Ethereum struggling to break through 2,700 resistance, but once it does, it's going to aggressively move higher. It'll take out $3,000 very quickly, and Bitcoin's dominance will drop significantly, and altcoins will do very well. I believe that's somewhere around the corner. 2 weeks, 3 weeks. Until then, in my opinion, altcoins are going to bleed. So just keep that in mind. I did share a short form video yesterday talking about that. Check that out. I think Ethereum is going to hold strong. The others' market cap is in a downtrend. Once Ethereum breaks through, I think the others' cryptos are going to be lifted with it. A lot of altcoins are going to be lifted with it. So very likely, again, to break to the upside with this, and this is pretty short term. Another bullish thing for Ethereum. I mean, if you look at weekly on-chain activity, ETH on-chain activity exploding. Mr. Crypto, the most bullish account I know of on X. This is extremely bullish. Don't underestimate Ethereum. Let's get a little bit of the extreme talk out of here. You can see from the bottom of the bear market, pretty much, Ethereum's on-chain activity was very low, and then throughout 2023 it grew, throughout 2024. And so why am I even bringing this up? I mean, all right, listen, pretty big spike up since the Petra upgrade. Since the Ethereum Petra upgrade, we've seen 3 straight weeks of significant on-chain growth. So whatever that upgrade did, it's bullish for Ethereum. It's looking good for Ethereum. And maybe those days that we're going to remember ETH being dead, so-called dead, they're in the past. I mean, I still do think ETH is AOL in the long term, but that doesn't mean that in the short term, ETH is just trash and it's zero. And I would even say, given this with the Cetus hack, that there's some attention that has been drawn away from SUI that Ethereum can benefit from, especially with meme coins, and meme coins drive activity. So something to keep your eyes on. It makes sense to be bullish on Ethereum right now. If it makes sense to be bullish on Ethereum, it makes sense to be bullish on altcoins. So moving on. Another reason to be bullish on altcoins. This is Linda Raschke. Let me tell you something about this account in particular. This is a no BS account. Let me actually just click on her profile real quick. I want you to, this is somebody who's been around for a while, all right? When she gives an opinion on stuff, I pay attention. Now, I'll also admit she's much smarter than I am. And there's a lot of times that with her charts, I'm just like, what are you talking about? I have no idea. But this is easy to talk about. And that is, the dollar is going a whole lot lower than anyone thinks. I have been repeating this for several months. Trump will do everything in his power to debase the currency, taking it out China's playbook. 1994, 2015, etc. Hope we don't see that extreme. But you guys know Trump wants the U.S. economy to at least appear as strong as it could. If the dollar index is going to do what Linda Raschke says, which I trust her judgment on this, then that's another thing that I would say is very bullish. It at least has the appearance of being bullish for our crypto holdings. This means significant risk on activity. Every time that Bitcoin has had a blow off top, or the crypto market has had a blow off top, it has been accompanied by a significant move down in the DXY. So what's lower than anyone thinks? I don't know. I mean, we've seen the DXY historically during its bottoms, the peak of bull runs, go to something like 89. So Linda, are you saying that it's going to go lower than 89? That would be pretty wild. That would be insane. My goodness, that would be very bullish for crypto. So moving on. Guilherme Tavares, blow off top, you tell me. All right. 1998, 99, 2000. In comparison today, those candles look very familiar. And does this mean that I am all in? I am all in on the NASDAQ doing what this does. And if the NASDAQ does this, then Bitcoin and altcoins will do something very similar. I would not say I'm all in, but looking at the NASDAQ right now, it really is looking like a V-shaped recovery. And I'm going to tell you that's shocking to me. And I've drawn comparisons to the 2018 V-shaped recovery, to the 1998 V-shaped recovery, where it looked like it was over in 1998. And here we are, and then 1998, 1999, we had a final rally, a blow off top to the dot-com bubble, and then it was over. And it was over in a big way. So is this what we have ahead of us for the NASDAQ? If this is how it plays itself out, then Bitcoin is going much, much higher during this time. What's a number over $200,000? How about that? I'll say that. You can write that down. I'll say that. If the NASDAQ puts candles similar to what we're seeing here with 1998, 1999, 2000, yes, I am quite convinced that that Bitcoin's going to go a lot higher, and that there's going to be some developments with altcoins. But moving on, we have the Atlanta Fed. Also something I would say is pretty significant. The Atlanta Fed GDP Now model is tracking Q2 GDP growth at a rate of 4.8%, up from 3.8% on May 30th. This is not insignificant. Okay. So if you remember, the Atlanta Fed projected that GDP growth for the first quarter of 2025 was going to be negative 3.8 or something like that. It ended up being negative 0.2. And the Atlanta Fed is usually not that far off, but they were that far off this time around. And so now so that was a negative GDP quarter, first quarter 2025. It is very unlikely that there's going to be a negative GDP quarter for the second quarter of 2025, which by definition means that we have avoided a recession in the United States. So does that mean there's zero recession, zero chances of a recession anytime soon? No, there's plenty of chances of recession. There's plenty of opportunities for us to put in 2 negative quarters, but it does decrease the likelihood for 2025 by a significant amount. And so what do we make of that? Maybe this scenario that we're seeing from Guilherme Tavares here, maybe this is it. Maybe we have another year to milk this for all that we've got. And then the day of reckoning comes, especially when you're looking at the bond market implosion, especially in Japan, and the United States is not immune to that. Moving on, the US dollar is crashing even as bond yields surge. This is the bizarre thing about all of this. It's a rare, dangerous split. This isn't normal. It's flashing a red alert for America's financial system. Red alert. We need to be very careful. This party could end at any moment. The thing that I would say is that I'll give projections for how, the timeline for what I think is going to happen with things. And I come to find that my projections are a little bit too fast paced. So red alert, not saying 2025, we're going to face that day of reckoning, but at some point we will. And what else do we have here? Normally, when the U.S. Treasury yields rise, the dollar strengthens because foreign investors chase those higher returns, needing dollars to buy U.S. bonds. But in 2025, that relationship has completely broken. The 10-year U.S. Treasury yield shot past 4.5%. That's a multi-year high. And yet the U.S. dollar index, which tracks the dollar strength versus major currencies, has dropped 6%. Year to date, the sharpest fall in decades. Why? Confidence is cracking. First tariffs in April, Trump rolled out sweeping tariffs on Chinese goods and imports from other major countries. Instead of boosting the U.S. markets, saw this as a tax shock that raises costs, weakens growth, and injects massive uncertainty. On the day Trump's tariffs were announced, the dollar fell nearly 2%. That's a huge one-day move for a major currency. For the year, the dollar slid around 6%, even as yields stayed high. Let's move on. Second trigger, fiscal concerns. In May, Moody's downgraded U.S. debt from its perfect AAA rating, downgrade in the U.S. debt. Why? Congress passed new tax and spending bills, adding $3.8 trillion in debt on top of 2017's tax cuts. Projections now show U.S. deficits hitting 9% of, I'll actually click on that this time, GDP in 2035, with total debt climbing to a staggering 134% of GDP. Normally, higher debt and deficits force bond yields up. Investors demand more return to hold riskier debt. But here's the twist. While yields rose, the dollar kept falling. Why? Because investors aren't flocking to U.S. bonds. They're demanding a premium to hold them as trust in the U.S. fiscal stability erodes. Third trigger, political chaos. Inside the Fed, confusion reigns. Some policymakers are worried about slowing growth and hint at rate cuts. Others want to hold rates high to fight inflation, which is dumb. Because, there was something I was going to share in this video. You might see it in tomorrow's video about actually the opposite happening, where we might be facing some significant deflation. Global investors are adjusting fast. All right, moving on. So foreign governments adding the pressure. The effects are already here. Mortgage rates have jumped significantly. For companies, it's getting painful. Inflation pressure is also rising. Globally, the effects are complex. Historically, this kind of yield to dollar disconnect is rare and dangerous. In the 1970s, deficits and inflation pushed up the U.S. bond yields while the dollar weakened sharply. It led to stagflation, instability, and eventually extreme Fed interventions under Paul Volcker. And what did we have as a result of that? We had a lost decade. A lost decade for stocks, not at all a lost decade for gold or for other commodities. But that led to a weakening of purchasing power across the board in the United States. There was an oil crisis. Gas prices shot up really high. So bottom line, this isn't a random market quirk. It's a massive signal that global investors are rethinking America's financial credibility. The longer the bond dollar disconnect lasts, the bigger risk of cascading shocks. Are you watching this historic moment? This is a historic moment. And I don't know how we get out of this unscathed. Moving on, really interesting, just a chart that interested me. Bro, check out this insane chart, particularly wages in gold terms. This has to be the end game. So 1913, average annual income, $800. An ounce of gold, $20.67. Income per ounce of gold, 38.7 multiplier of that. So you want a higher income than in comparison to ounce of gold, And 1971, the ending of Bretton Woods, the depegging of the US dollar from gold. That was a peak of sorts in some regards. Average annual income, $10,500. Average price for an ounce of gold. So you could have bought with that average annual income 248 ounces of gold. And today, the average income buys you 19.35 ounces of gold. That is not good. So if same amount of gold, I'm not sure what that means, but okay. Make it a habit, not financial advice, of pricing things in gold. I have a lot of charts on TradingView that show stock market priced in gold, Bitcoin priced in gold, lots of different things. And what you'll see is that, if we're going to measure in that, which, the 1929 stock market crash, the Great Depression, was measured in gold, pegged to the US dollar. And if you measure in that, the peak of the market, the stock market, was in 2021, and we haven't gotten close to that since then. One more thing. Guys, I need to draw your attention to this. This is not insignificant. Do not get too greedy. Just please protect yourselves. Very few people see what's happening right now. The entire economic system is changing in front of our eyes. AI is unlocking a huge opportunity, but it is already taking jobs, and we are heading towards an inevitable debt reset. Bitcoin is rising as the new monetary standard, a finite capital network where everyone will secure their relative standing as everything becomes more abundant thanks to AI and robotics. So what can you do? Take full advantage of this brief period. This is a time of maximum opportunity for those who see what's happening. Bitcoin is still ludicrously undervalued for what it is. Agreed. Lay your claim to the digital capital network of the future, and do it while you still have easy ways to generate income. As an entrepreneurial optimist, I tend to think that as long as money is flowing and people have needs, there will always be opportunities for those who seek them, but I can't deny the future is more uncertain than ever, and competing with AI and robotics will grow increasingly difficult in many domains. Now is the time to lock in your wealth on the Bitcoin network. Do not delay. There's already a clear move out of sovereign debt and into hard assets like gold and Bitcoin, but we haven't hit the tipping point yet. There will be a tipping point. There will be a tipping point. And that money will eventually flee for hard money, the hard money exit. But by then, the advantage that exists today will be gone. And you will look back and reminisce about 100,000 Bitcoin like we do about $1,000 Bitcoin today. Those days are coming. But moving on, Bitcoin's price is, at the moment I'm making this video, around $106,000. Ethereum is $2,600. Again, I'm expecting a little bit of chop here before a breakout. I've given you plenty of compelling reasons to be bullish on Ethereum. We can see the Bitcoin ETH chart. Let's take a look at the ETH Bitcoin chart. And exactly that breakout that I was talking about earlier in this video, breakout with a bull flag. I would say that's very bullish for Ethereum moving up in price in Bitcoin. And the idea of Bitcoin crashing, but Ethereum, like the big spikes up in Ethereum's price in Bitcoin, it's always, because Ethereum outperforms Bitcoin to the upside. Let's look at the NASDAQ and just see where we are. We are so close. We are so close to breaking an all-time high in the NASDAQ, which is insane to me. This is the irrational rally, the irrational perhaps end of cycle pump. You can see, my goodness, I mean, we're above the 786 retrace. We're knocking on the door. And similar for the S&P 500. Now the Dow Jones is fighting right up against resistance, the 200-day moving average. Now it already did break through, but then lost it. And then right now it's eking out above. Another picture, V-shaped recovery. Let's see what we can get with the Dow Jones. But I pay more attention to the S&P and the NASDAQ than the Dow Jones. But we draw a fib here. We can see right at the 702. Excuse me, I should have locked that in. I'm still struggling to lock it in. Can you please lock in? You know what? I'll let, all right, 702. 702. So anyway, my general perspective right now is I'm a bit of a crab market, chopping market until the end of the month. And not the end of the month, next couple of weeks here. And then I do expect Ethereum to break out, which means that altcoins should follow along with Ethereum's lead. For me, my eyes are on Ethereum. let's see where we go from here. But anyway, that is all I have for today. I hope you have a wonderful day, a wonderful rest of your week, and I will most certainly be seeing you in another video. Peace.